Here we are again. I'm eating cheeses this time. Instead of grapes, I'm eating some cheeses. They're pretty good. Anyway, we're going over the liquidity void, the third strongest PD array. This PD array forms whenever price has a crazy and very aggressive displacement after a consolidation. Something like this. See that? Something like that. Or like this. Because you got this consolidation right here, the non-farm payrolls kicks in, boom, liquidity void created. Now, price will tend to do two things to this liquidity void, or to the liquidity void. It can either respect it to continue the trend or continue the active narrative, or it can refill the entire liquidity void because it is a void of liquidity. For example, right? You remember how fair value gaps, right? For example, like this bearish fair value gap. There's only sell orders in between this gap. There's only sell side delivery. So when price is aggressively delivering lower, consecutively creating bearish fair value gaps, that makes a liquidity void because all we're seeing is just sell side delivery. There's no buy side here, none. No buy side at all. In between these two fair value gaps, nothing. Just straight sell side. So what I'm trying to say here is what price will tend to do is rebalance it. It doesn't matter how much rebalances it. It can be to the lower quadrant, upper quadrant, equilibrium, or it can rebalance the whole thing. But there's a lot of different scenarios when it comes to liquidity voids and how price will react to them based off of time and just the active narrative. Let me get these cheeses real quick. They're pretty good. Anyway, so we're going to talk about this liquidity void here, where you can barely speak. So we have price consolidating right here, back and forth, 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 right? Then you have the liquidity void. Boom. How do you actually identify the liquidity void? Well, first, for a liquidity void to be a liquidity void, it has to displace. And what I mean by displace is the definition of displacement is price moving fast while creating fair value gaps. Is this happening here? Yeah. So this is a liquidity void. But how do we actually get the price levels of the liquidity void so we can say, okay, here's equilibrium, here's upper quadrant, here's lower quadrant, and stuff like that? Well, the first fair value gap of the liquidity void, right, which is this one right here. This is the first fair value gap. I'm going to mark it just so you won't be tripping. Like, where's the fair value gap? Nope, it's right there in front of your face. I don't even have the same thing. Right there. That's the fair value gap, okay? What you want to do, right, since this is a bullish liquidity void, you want to find the open of the first candle of the first fair value gap. Because remember, a fair value gap is created with 3 candles. 1, 2, and 3. Pretty simple, right? So you want to take the open of the first candle, which would be this right here. You want to take the open in the first candle. And then, hear me out. You're probably like, okay, do we take the open or the close of the third candle? No. Because guess what? If there's another fair value gap right after this one, we take the close of the third candle of the last fair value gap, which is this right here. This is the close of the third candle of the last fair value gap. So between this and this is your liquidity void. Whenever price stops creating fair value gaps is when the liquidity void ends. So you're probably like, okay, so this should be the end of the liquidity void, right? Yeah, it is. Because after this, does price create any more bullish fair value gaps? Nope. It does not. No, it doesn't. So, from the start of the liquidity void, and when I say start, I mean the first fair value gap, you want to mark the open, okay, listen here, the open of the first candle of the first fair value gap, and then at the end of the liquidity void, which is the last fair value gap of the liquidity void, you want to mark the close of the third candle, okay? You got that? The close of the third candle. If the third candle of the last fair value gap is bearish, you want to mark the open of it. Okay? You want to mark the open. But, and also for the first candle of the first fair value gap, if it is bearish for a bullish liquidity void, you want to mark the close of it. Is that understood? Okay, cool. That's understood. Ooh, we just hit the cheese bag. Might need to get some more. Anyway, like I said, 2 things that price will do to this liquidity void. We're going to apply the quadrants to it right now. It will either respect it, or it will refill it. And as we can clearly see in hindsight, price refilled it. Why? Because at 8:30, right? That was a heavy stutter. Jesus Christ. At 8:30, this was all manipulation. This was all liquidity injection. This was all manipulation right here. So Think about this for a second. I'm going to leave this fair value gap. It purposely accumulated, manipulated, distributed, right? But within this manipulation, what did it create? A liquidity void. That liquidity void gives price a reason to what? Do you know what it is? It gave price a reason to drop lower or to distribute, or to offer TGIF. If you know, you know. To offer TGIF, which is the Thank God It's Friday setup. If you know, you know. But you can learn TGIF on my channel. I promise I'm not gatekeeping that. Everything that I know is on my channel. So don't be like, oh, he's gatekeeping a strategy. Nope, I don't do that here. Anyway, the liquidity void was created during the manipulation to allow price to distribute smoothly, right? It did it very smoothly, actually, yeah, very smoothly. Then it proceeded to consolidate for the rest of the day. So if we drop down to the 5 minute, let's see, let's drop down to the 5 minute. Here we go. You can clearly see 9:30. Here's 9:30. Consolidates for the first, 30 minutes, which is the opening range. Then guess what? 10 o'clock kicks in, which is when price should deliver. And guess what? Boom, rebalances the entire liquidity void. So now, sell side has been offered. Because mind you, since this is a bullish liquidity void, that means there's only been buy side offered within this range. Within these two lines here, only buy side. Strictly buy side offered here. So once price fills the other side, or like, I guess you could say paints over the other side. I forgot how ICT explained that analogy. But it's like a paint roller. If you just swipe up, or swipe up with the paint, you still got some spots left that you got to use. So you're going to have to swipe back down with the little paintbrush, and boom, you covered that spot that you swiped up on. So you just go swipe up, swipe down, swipe up, swipe down, swipe up, swipe down with the paintbrush, so you can evenly cover the wall that you're painting, right? That's exactly how it is with price. If you paint up, price has to get that brush and paint right back down to cover any spots, any little line, any spots that you missed. That miss, in this case, would be sell side delivery, because within this range, there's only buy side. And guess what? You know the funny part? It also created another liquidity void. If we go to the, I think it's the 5 minute. Let me turn on my volume. Hold on. I think if we go to the 5 minute, yeah, there is a liquidity void. Pay attention here. Mind you, I did say that price consolidated from 9:30 to 10. See that? That's just consolidation right here. Back and forth, back and forth, back and forth, back and forth. And then guess what? 10 o'clock, boom. Whoa. And yes, you can have a lower time frame consolidation with a higher time frame expansion. So you see this 3 minute consolidation here at the 9:30 opening? The liquidity void is on the 15 minute. Why? Why do we say the liquidity void is on the 15 minute? Because listen here, if we go back to the 3 minute where the consolidation was, price was barely creating any fair value gaps. It wasn't doing it consecutively. It wasn't. You're probably like, oh yes it was. It did 1, 2, and then oh no it didn't. And, oh no it did 1, and then oh no I didn't do it. Oh look it did 1, and then it oh. But if we go to that 15 minute, whoa, there it is. Oh, look at that. Just absolutely amazing. See that? So, in the first fair value gap of a liquidity void, okay, since this is a bearish liquidity void, if the first candle of the first fair value gap is bearish, you mark the open. Okay, so right there. Pretty cool, isn't it? And then, if the third candle of the last fair value gap of the liquidity void is bearish, you want to mark the close of that. So from here to here is your liquidity void. So as we speak, and as the market is closed, because I'm recording this over the weekend, price is currently resting at the lower quadrant of a not a fair value gap, but of a liquidity void. And even still the lower quadrant of a fair value gap. That is true still. But that is liquidity void. It's real simple, isn't it? Yeah, pretty simple. We're going to do one more. This was a surprisingly quick explanation. I'm over here eating Cheez-Its, and this video is under 10 minutes long, just from the recording. We're going to go over one more example, just to make sure it goes over 10 minutes long. Yeah, we're going to be evil today. We're going to be evil. We're going to purposely make the video long for you. Okay, let's jump up to the 4 hour. Wow, that example's on the 4 hour? Really? Yeah, wow, it is. Okay, that's pretty cool. All right. Here we go. As you can clearly see, we got this major consolidation right here. See this? Just back and forth, back and forth, back and forth, back and forth, back and forth. See that, right? You do see that. Guess what? First fair value gap is right here. Price expands, 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 expands. Where do the fair value gaps stop? Where do they stop getting created? Do you know? Right here at this candle. Right there. Right there. Probably like, what? How? I thought they stopped right here. Well, hold on, right? Because you would say, in your analyzation, right? If I didn't tell you that, you would say, okay, this is the third candle of the last fair value gap, right? But guess what? That third candle went to use by creating another fair value gap. So the fair value gaps are still getting created. See this one right here? This is the third candle of the last fair value gap from this one right here. This is that third candle. But it didn't get used for anything. Did it get used to create another bearish fair value gap? Nope, didn't. So this candle right here is where the fair value gaps or the liquidity void ends. So the first candle of the first fair value gap of the liquidity void, there's a lot of ofs, I know it's a lot of qualifications, but since this is a bullish candle for a bearish fair value gap for the first candle of the first fair value gap of Jesus Christ, the liquidity void, you will want to mark the, what is it, the open? No, the close, my bad. The close of that bullish candle, right? And then, since this is a bearish candle for the last candle of for the third candle of the last fair value gap of the liquidity void, you would want to mark the close of that candle, which is right there. So from here to here is your what? Liquidity void. Add the quadrants. Boom. Bam. And then as you can clearly see, price purge liquidity down here. And I think it hits some form of like a reclaimed order block or inversion fair value gap, something down here. And then it reversed higher, rebalancing the entire liquidity void. I'm going to drag it out and see. See that? Entire liquidity void rebalanced. Mind you, this is a magnet. Okay, this is a magnet. This isn't something to play around with. Whenever you see a liquidity void, I'm going to say this before I end the video. Let me just chew on this cheese it too. Whenever price creates a liquidity void, you have to be very cautious because this is literally a void. The word void is not in there for no reason. This is literally a void. It's a magnet. Think of a gigantic magnet sitting in the market. That's exactly what it is. So when you see this, you have to think of, okay, what is price going to do first before it fills this liquidity void? Or if the liquidity void is in the direction of the current narrative, is price going to respect it? Or is it going to offer manipulation to fully rebalance the liquidity void before delivering the active narrative? You have to think about stuff like that because these liquidity voids are very, very strong. It's not the third strongest PDRA for no reason. Anyway, I'll be in this episode here. I'll see you guys in the next one. I talk too much. Good luck and good trading.